Welcome to the blockchain. Things are about to change. Open up the gates. Systems get replaced. Bitcoin. Decentralize the trust. Security, transparency. The network's run by us.
You're listening to the Bitcoin.com podcast. This is Zach Doty, and I have Erik Voorhees on the show today. Thanks for joining us, Erik. Nice to have you on the show.
Thank you very much for having me.
So we were just talking a little bit before the show got started and about Classic and a few other things that are happening right now that are big issues in the Bitcoin community. Tell our listeners what your position is on Bitcoin Classic versus Bitcoin Core.
Well, in case anyone has been living under a rock, they have probably been aware of the block size controversy, which in some ways has been Bitcoin's largest challenge to date, and not so much a technical challenge, but more of a social challenge in its community. And Classic is sort of the latest attempt by a segment of the community to increase the block size, because that segment believes that the Bitcoin Core developers are not planning to increase the block size, which is a fair point since they've stated that they are not. And so they're basically taking matters into their own hands and doing a hard fork to get to the 2 megabytes, and it'll at that point sort of be up to the community, however you want to define it, as the miners or the companies or the users themselves and indeed the developers to figure out, if they support that new version and then that will be what's built on, or if they want to stick with the current core team and its management. So that's been what the issue is about. My personal thoughts on the matter, I had largely stayed out of the block size debate. It's been raging for a good year or so. And I stayed out of it largely because I'm not a developer, so my technical expertise is not on the level of many that are passionate about the topic. But I started to get involved after I saw the censorship that was happening in the community, specifically on the Bitcoin Reddit and the forums, where people who believed that the blocks need to be bigger would post about that feeling, that thought, and try to get discussion going. And those messages, those words were just removed. They were censored. They were taken off of those forums. And I was very confused and pretty upset to see that. The Bitcoin ethos is very much opposed to censorship, opposed to censorship of money, and to be building a project based on preventing censorship of money and to do so by censoring speech is, clearly hypocritical and unhelpful. So, over the last couple of months, I've probably gotten more involved and I've just seen how angry these sides are at each other. And it's gone way beyond just professional disagreement to the point where people are often assuming the worst in each other, assuming very bad motives, flinging, ad hominems and just uncivility around wherever they can. And it's completely poisoned the debate. So it's a very unfortunate situation. Right now, the biggest problem is the social cohesion in the Bitcoin community. It is not the size of the blocks. It is not who's leading the development team. It is the fact that so many people who are seemingly passionate about this project are yelling and screaming at each other, as opposed to just realizing that smart people often disagree and to just keep the discourse civil and work through it. So my ultimate goal is to, where I can, try to help people get back in that spirit of camaraderie and civil discourse on the topic of block size debate.
Great. Do you have any concerns over a hard fork, or are you confident that a hard fork will be a pretty easy thing technically?
I have concerns, but to live in a Bitcoin world, is to live in a world of risk. The technology is very, very new, very volatile. The whole thing could collapse at any moment. And so I've sort of lived in that world for 5 years, and I accept and am comfortable with that risk all around me all the time. So it's incorrect to say that a hard fork is risk-free, but I think it's also incorrect to say that just because there is risk means it shouldn't be done. I'm generally in favor of larger blocks, and that doesn't mean I'm in favor of larger blocks forever, at any size. But I think right now, given the situation, a conservatively larger block is not going to cause devastating harm and may well cause significant advantages. And the only way to do that, to actually increase the block size, is with the hard fork. So I feel like it should be done, and it should be done with careful stewardship by developers who understand how to do it. And if that can be done, then all the other wonderful things that the core has been working on, I think, can be continued to build on that platform.
I agree. And I also agree with you that the social cohesion is the number one issue, not the block size. We could survive a fee market developing, but we can't survive, a complete division between the half of Bitcoin and the other half, kind of dividing their economic interests, and that's what would really devastate Bitcoin. It is great to see the social cohesion developing around tools like Consider It. I found that's a great way to visualize the support for various things. And what I noticed is under principles, second to 21 million coins, which was the most agreed upon principle. The second one was no censorship. That's above even open source and fungibility. And so, that's definitely a hot topic right now in the Bitcoin community. And I've also been a little put off by the censorship, and that's actually caused me to unsubscribe from our Bitcoin and subscribe to our BTC and unbookmark, Bitcoin.org and focus on Bitcoin.com, which is actually how I started to connect with Roger. And this podcast is coming out of that. So hopefully this podcast is going to be a response to the censorship and a way for people to actually learn about both sides of the issues. And we're welcoming people on both sides of the issues on this podcast. So I think we have a couple guests already scheduled who hold to this small block position, and we're happy to hear their position on things.
Yeah, one of the worst things that Core has done, and I try to say this with as much, understanding and compassion toward them as possible, but one of the things that they have objectively been extremely bad at is when they were silent during this censorship. And a lot of people have perceived that it is Core that is censoring the discussion, and that's not quite true. It's not Core. Most of the people on Core do not support this censorship. A few specific individuals have done it, and the problem is that Core has not publicly denounced that. They should have been extremely vocal, very quickly in saying that no, this is not the way to figure out how to push Bitcoin forward. It's not to censor one side of the debate. But they didn't. They remained silent. I mean, you can understand why, because the censorship, at least superficially, helped some of their opinion. But if you go deeper, it's actually been the thing that has turned more people against Core than any other, and especially has caused more people to turn against Core than any issue of any technical matter. People don't so much disagree with Core's roadmap as they do disagree with the practice of censoring the ideas. And I think Core could win a lot of favor back if they genuinely and quickly and officially and loudly and publicly stated full and complete denouncement of that kind of censorship. It's not going to heal everything, but that's like step one that they need to do if they want to get some of their credibility and goodwill back.
I agree. And, one of the things that has most attracted me to Bitcoin Classic is the fact that Jeff and Gavin are just two of the most level-headed developers in the Bitcoin community. And, Gavin has proved that he can be very reasonable and open and understanding and considerate and not get caught up in these ad hominem level debates. And so that's one of the characters about him that make me attracted to, having him be the benevolent dictator almost of this. And I know he doesn't want to take that role, but definitely that characteristic of him makes him a great candidate to be in charge of Bitcoin Classic.
Yeah, well, and, there's certainly an understandable ethos in the Bitcoin world that is sort of antithetical to leadership in all its forms because of the hypersensitivity to centralization, the hypersensitivity to control, and the desire, correctly, of everyone in this community to maintain an open and neutral and free system. The problem is, while that's a good principle and needs to be maintained in any kind of project, whether it's a business or an open source software project, there has to be leaders, because it's the chefs in the kitchen problem. You can't, even if you have lots of smart people, they can't all just throw ideas around. Like, their structure has to exist. It shouldn't be coercive structure, but structure has to exist, and it should naturally form in any productive organization. And so, if you understand that, then a group like Core, which is supposed to be the lead maintainer of the protocol level of the software, they need to understand that they are leaders. They're not given that as an eternal crown that they can wear. It can be rescinded, but for the time being, and up until recently, they have been the leaders. And they have not understood that being leaders requires not just, expert technical ability to build, which is very important, of course, but also requires the ability to build the social community around it. And they've completely ignored that side of things, or maybe not ignored it, but just not understood it, understandably, because they're engineers. But they need to wake up pretty quickly and realize that that is a part of their job. If they want to be core, then they need to be leading the industry and behaving in a way that merits their leadership.
Completely agree. So do you think that right now it looks like the momentum is leaning towards a hard fork? Do you think that it looks like Classic is going to win this in the short term?
It seems that the hard fork is... I'm quite convinced that hard fork will happen, and it will happen this year, and it may happen soon. It probably will be Classic that does it. I think objectively, Classic already has a majority of mining hash power supporting it. Perhaps a super majority, but I don't know yet. But certainly a standard majority. As for the community itself, a lot of people are interested in it. I don't know if it's a majority or not. It's really hard to figure out how to gauge the sentiment like that. And indeed, each side in this, one of the problems has claimed to be the majority. The core makes frequent statements like, the vast majority of engineers support core, and they make it sound like Classic or the desire to move to larger blocks is being done by a minority of people or just the ignorant masses. On the other side, Classic has done the same thing and has said, we have the majority, everyone wants bigger blocks now. Core is this small group that is controlling everything, and that they're trying to destroy Bitcoin and all this stuff. And people need to move away from this kind of brinkmanship and realize that these positions that people have are really not very far apart. We are not having a debate about some fundamental principle of how Bitcoin should operate. We are not debating whether coins should be fungible, or whether there should really be a cap on the money supply, or any of the fundamental principles that make this money system work. None of that is being debated. Most people agree on those principles. It's just a matter of some relatively nuanced technical differences. And, being a non-engineer myself has helped me to see that a lot of these differences are not as far apart as the engineers like to make them. And when they can't win the debate, they resort to making their language more inflammatory, more divisive, yelling and screaming about the terrors of the other side. And both sides are doing this. I mean, it has been extremely destructive to the entire conversation.
Now, Core has proposed SegWit as a solution to scaling, and SegWit allows for a second blockchain basically to hold, or a second data structure, I should say, to hold the signatures so that they can be separated from the transactions and the block headers. Do you see that as a solution in the short term to scaling?
First, people need to avoid this term solution when it comes to scaling. Scale is a gradient. Things scale over time forever. There's no point at which you've solved scalability. Scalability is a constant engineering challenge of systems of any size and status. So no thing solves scalability. SegWit doesn't solve it. Bigger blocks don't solve it. What you do is you try to address the need for scalability, which again is a gradient, by figuring out methods for moving further along that scale. SegWit is a really good one to move further along that scale. I think everyone loves it. People debate, whether it should be a hard fork or soft fork and some of the details of it, but everyone likes it. It should be done at some point. But it should not be done in a way that precludes other good solutions from also being done. And this is, again, where Core has I think, gone wrong, is by taking the consensus that was relatively achieved after the scaling conferences, which was indeed to move to a larger block, like the 248 plan of Adam Back, I think was generally agreed. And people were in favor of that. And then SegWit came out and everyone loved it, but instead of using SegWit as a complement to the block sizes, it was used to replace the block sizes that everyone had already agreed to move forward with. And that really made a lot of people distrust Core, set the conversation back months again, and it was a mistake. So I think SegWit should be done, absolutely. but it should not be done as a replacement for core, because again, neither of them are a solution. Both of them are good ways to increase the scalability of Bitcoin.
And SegWit probably isn't as short-term a solution as increasing the block size. In the short term, it might take a while to deploy SegWit, to verify it. Are you in favor of SegWit as a hard fork, or would you prefer to see it done as a soft fork?
This is one of those things that I would defer to the experts on. But from my cursory understanding of it, it seems like in a perfect world, it should be done in a hard fork. The reason it's not is because hard forks are kind of scary. And because there's been this pressure to do something for scale fast. So SegWit has been proposed as a soft fork because it can be done relatively quickly without a hard fork. But both sides here are disagreeing about what is a good short-term solution. Some are saying that SegWit is actually a longer-term solution because it's more complicated and it has more variables, more moving parts, probably needs more testing than would be a simple hard fork up to 2 megabytes. And both sides disagree on this, and that's fine. I mean, that's a good realm for debate. But I don't have an answer to that other than to say if people could bring the discourse back to the realm of civility, we could probably come to some good compromise and figure out a good path on that.
And the Lightning Network. Do you have thoughts on the Lightning Network as it relates to scaling? And do you think that we'll see the Lightning Network deployed this year and start to be adopted by wallets and other services this year? So
I'm also not an expert on Lightning, other than to know that it's very cool, but also to know that it's not done. It's not anywhere close to done. It's sort of under construction, and everyone is waiting to see, how much of its hype it will meet. Hopefully it'll meet all the hype, and hopefully it'll allow, millions of tiny transactions to happen very efficiently, and that would be great. Again, that furthers us along the scale, the gradient of scaling. But I don't think it precludes either something like SegWit or something like increasing the block size. All these things are good developments in order to increase scale. They should all be done. And if people can talk to each other politely, then we can figure out which ones to do first and how and what the best manner is for all of them.
I agree. So do you think that Blockstream has any conflict of interest with Bitcoin scaling on-chain?
They seem to have a conflict of interest. That's not necessarily bad or a problem. I mean, conflicts of interest exist everywhere all the time. No one's immune from them. I don't think Blockstream should be vilified for having a solution that may be more valuable if blocks are small. And it does not mean that the core devs are corrupted into making Bitcoin worse for the benefit of one company. It's possible that's the case, but I don't think it is, and I will give people the benefit of the doubt. A lot of the people in Blockstream were involved in Bitcoin long before Blockstream. They are very dedicated and passionate about the project as a whole, and I would bet that their allegiances are largely more to Bitcoin in general than they are to Blockstream in particular. I think Blockstream is an excellent company. They're building some very cool stuff. I'm glad that they exist. And I don't think people should be vilifying them to the extent that they have been.
So what are your thoughts on node count and how that might be affected by an increased block size? Do you think there will be any noticeable effect at all going from 1 megabyte to 2 megabytes? And how many nodes are enough? How many do we really need to be decentralized?
Yeah, good question. And node count is one of those things that sort of got lost in the debate from a while back, but is very relevant. Everyone wants more nodes, right? More nodes are better. It means more decentralization. Having 1 or 2 nodes in the world would be a failure of the project. Does that mean that going from 10,000 nodes to 100,000 is 10 times better? No, it's a diminishing return. Essentially, you just need enough nodes to make sure that no one controls, even a plurality of nodes. And I think probably the number that is the bare minimum for that is, several hundred around the world. As long as there's that, I think people can feel like the network is pretty healthy, especially if those several hundred are in different places, held by different types of people, different interests. And we have an order of magnitude more than that. We have something like 6,500 nodes, full nodes online at any given time. So I don't think, even if larger blocks would reduce node count, I don't think that's necessarily a significant problem. It's all a matter of degree, of course. But it does seem like some of the developers feel that anything that can reduce node count is bad and thus must be avoided. And I think that fails to appreciate the importance of trade-offs when there are different benefits to things. I'm also disturbed by some in the community who seem to think that everyone in the world that uses Bitcoin needs to be running a full node. That's not only technically impossible, but would be an absolutely terrible user experience. And I don't know why people have held that belief, but there are literally people who think you are not truly using Bitcoin unless you are running a full node with the entire blockchain, fully validating every transaction and all that. And I think, frankly, that's nonsense. There should be a lot of nodes, but not everyone needs to run a node, just like not everyone needs to run an email server for the email network and email protocol of the world to work very effectively.
You mentioned one thing in that answer right at the beginning. You mentioned this decentralization and diminishing returns. I think that's an important concept. I think Coinbase mentioned that, and maybe you can touch on that a little bit more, how you get more decentralization going from 1 to 5 than you do going from 5 to 10 or even from 5 to 25, just because, you're focused on the initial decentralization, not so much, making everyone run a full node.
Yeah, the way to think of it is we shouldn't just worship decentralization, as a god. Why is it that we want decentralization? There's a very important reason we want it. And that reason is we don't want anyone to be able to control the system. That's the whole purpose. So if you have a system like PayPal, where there's one entity in charge of the ledger, they control the ledger completely. They have, essentially monopoly control over that ledger. That's a node count of 1. If you move to a federation of businesses that ran a shared ledger, let's say some major banks that all ran and you had nodes, like 5 or 10 big banking nodes running a financial system. That's significantly better than just one company because they all keep each other in check to some degree. But you still don't have very much decentralization because perhaps all those banks are in one jurisdiction. They all are going to have a similar management style and they're all going to comply to the same, the same rules and regulations and censorship edicts. So that would be better than one, but not great. If you have a system that has 100 nodes or 1,000 and they are run by, different types of people in different places, now you are very, very decentralized to the point where doubling the number of nodes doesn't really mean you've doubled decentralization. It's an asymptote, just like Bitcoin's inflation schedule is an asymptote. Over time, you get more and more coins, but there's a diminishing return. Decentralization works in the same way. So the more nodes you have, the better, but at the margin, the benefits start to fall off.
And Roger recently suggested on Twitter, Roger Ver, that if by increasing the blockchain, we might actually see an increase in full nodes because we're going to increase or double the number of users that could potentially use the Bitcoin network. Do you think that that's likely?
I don't know if it's likely. It's certainly possible, and it's a good theory. It would have to be borne out in the real world to see if it's true or not, but it's certainly very possible. And it's the kind of argument that someone with an understanding of economics would make, whereas someone who is just engineering the system may not comprehend that, because a larger block may burden each individual node. So that alone, with static analysis would mean that fewer nodes would exist. In the real world, what you've done is you've made the system more scalable. And if that brings in X number more users and some portion of those new users run new nodes, then you can end up with more nodes than you started with, even though the burden per node is larger. So I wouldn't say that Roger's necessarily right that it would increase node count, but it certainly could, and it's an argument that is worth considering.
I think the Lightning Network proposed in their paper that even with the Lightning Network, for everyone in the world to use Bitcoin, we'd have to end up with blocks around 130 megabytes. And, so obviously technology is going to have to scale to be able to reach those levels. And I think 2 megabytes is a pretty conservative increase that we can test. And I think the most exciting thing about seeing a hard fork to 2 megabytes is that it'll give us real world data that we can use to go back later and say, okay, we know what will happen. Now we kind of already have that, given that we know what happened in node count and other metrics between when the average block size went from, 200 to 400 kilobits. So we kind of already know that, but, it'll be great to get more real world data on that.
That's a really good point. We do not have a good understanding, nothing close to a scientific understanding of the elasticity of node demand, as an economist would call it, at any given block size. So one of the better arguments in favor of actually doing a hard fork to a conservative block size like 2 megabytes is that we'll get a lot of really good information. If node count drops from 6,000 to 500, going up to 2 megabytes, then we've made a mistake. Like something really bad has happened. We need to stop, not do more of that until we have a better solution. We'll know that that's extremely dangerous, that there's incredible elasticity in node count based on the size of blocks, and we'll be able to have a more informed debate. And there should be, and under that scenario, people should go back to the core devs and say, wow, you guys were really right about this. We're sorry that we didn't understand it. But alternatively, if the hard fork happens and node count doesn't drop at all or drops very slightly, then the fears of the hard fork and the higher block size really were overblown. And a lot of the core devs should go to the community and say, yeah, well, we overestimated the risk and the problem. We all know better now, so let's continue and grow this thing further in good ways. That's how the community should proceed. Take conservative, measured steps after debate has happened, see how it goes, and then move on from there.
There are other altcoins where, and you're in the altcoin world with Shapeshift, and there are other altcoins, as you're aware of, like Dash, that actually compensate the nodes, and they have quite high node counts because of that. Mm-hmm. Do you think that there's a place for that sometime in the future? If blocks have to be a few hundred megabytes, do you think there's a place for, at some point, the miners saying, okay, we're willing to give up, 10%, 5% of the revenue in order to see more decentralization in the node count?
I think, what Satoshi built is genius, but not perfect. And if I was to point out a flaw in the system, it is that nodes are not incentivized. I don't think it's a fatal flaw because there's still some good reasons to run nodes yourself. Specifically, businesses need to run nodes. Like at Shapeshift, I think we run 3 full nodes all the time for Bitcoin. So there's always going to be people who have an incentive to run a node themselves. But yeah, I mean, it would have been better if there was some sort of monetary incentive, even if slight, for people to run nodes themselves. Yeah. Can that ever be done in Bitcoin? I'm not sure. I mean, maybe it would be too contentious. It's certainly an idea worth considering, and I think it's good that altcoins can experiment with those kind of things so we can get real world data and see how effective they are.
Number one value of altcoins, in my experience, or in my opinion, would be that they provide a testing ground for new features. And so that's why I love seeing you with Shapeshift providing more fluidity between the altcoins, because that lowers the feedback loop between, it lowers the barrier of entry between these coins. And the lower that barrier of entry is, the faster we'll see which coins actually have market demand and, which coins have something to offer in terms of innovation. And we can let those coins test that for a year, for 2 years. And if the node count were to decrease down to the low hundreds, right, we'd be able to say, okay, now it's time. We can actually build community consensus around this idea of incentivizing nodes because they're scarce enough that we need to do something about it. And we'd be able to, potentially fork the network again to change the incentives for nodes.
Yeah, agreed.
Tell us a little bit about how hard forks tend to take place, and if there's anything users should be aware of as a hard fork happens, and the way that the supermajority works, and how we're looking for 1,000 blocks with 750 votes in favor of the hard fork.
Okay, I'll try to give a basic explanation, only because I only understand the basics of it. In the case of Bitcoin Classic, the rules that are being implemented for this fork are that once you have 750 blocks out of previous 1,000, out of the last 1,000, essentially marked in affirmation for supporting 2 megabyte blocks, for supporting the fork. Then the fork occurs, and there are then 2 Bitcoins, 2 chains, and right at that point, kind of like just after the Big Bang, things will get really interesting for a very short period of time. If there is overwhelming support for one of the chains, which if it had 75% of the miners, is probably going to be the fork itself. Coins that are traded on that chain will retain value or grow in value, and coins traded on the other chain will fall in value very quickly. Because if you have a Bitcoin at a certain address today and it forks tomorrow, you now have a Bitcoin at the same address on 2 different chains. Depending on what exchanges which of the exchanges are supporting. If any exchange supports the fork that you think is going to fail, you have an immediate and strong financial incentive to sell your coins of that fork at the exchange immediately for dollars or Dogecoin or whatever, because you'll get those coins and then you'll still have the Bitcoins on the chain that you believe will last. So what you get is sort of a race out of the door for whichever fork is going to fail. And that period, that window of decision making is not going to be months. It probably won't be weeks. It could be an hour. It could be less than that. It will be figured out very quickly from an economic perspective which of the forks is going to be, the one true Bitcoin. And once that's decided, both by the miners and by the price of each coin, the world will just assume that is Bitcoin and proceed as normal. So if that all sounds scary and chaotic, it is a little bit. But if you're worried, all you need to do is during that transition period where people aren't sure which fork will become the winner, just don't do much of anything. Don't send your coins around. Don't have them at an exchange. That's generally a good principle anyway. Hold them yourself in a key that was created before the fork, and just wait it out. See how it goes. The community will consensus around one of the forks not too long, and things will go relatively back to normal, and you don't need to do much other than that.
Now, one of the things that gets back to that censorship issue is that our Bitcoin has at several points stated that implementations of Bitcoin which change the consensus rules are not Bitcoin. So they would say Bitcoin Classic is not Bitcoin. And I think Jeff Garzik offered a clarification to the definition of what Bitcoin is recently that I thought was helpful, and maybe you would agree with his thoughts on this. He said if the UTXO set stays the same, then it is Bitcoin, right? If the unspent transactions stay the same, then you're still talking about the same currency, and the private keys continue to work for everyone. Would you agree with that definition?
Yes, and I am vehemently opposed to any argument that says that a fork of Bitcoin that changes the rules isn't Bitcoin. That assessment can only really be made in hindsight. Once the fork happens, and once the community coalesces around one of the forks, you can say that the minority fork that's not used anymore is no longer Bitcoin. But the one that is longer and the one that is used, that is Bitcoin now.
Right.
And you can't, unless those people are saying they know which fork will be chosen, they can't, ahead of time say, because, a priority, say which one is the real Bitcoin and which one's not. And that tactic has been used to shut down a lot of the debate. And I think it's really unhelpful and it's really inaccurate, and it needs to stop. And especially the people who say something like Bitcoin Classic or Bitcoin XT before it is an altcoin. That's absurd. I mean, that's as absurd as saying everyone in the world that uses Bitcoin needs to run a full node themselves. Those kind of statements are just, it's hard to argue with them because they're so ridiculous. An altcoin, I think Jeff did a really good job of sort of scientifically or objectively showing why those forks are not altcoins. But I think the people who have been making those claims are running out of good arguments, and so they're resorting to silly things like that.
One interesting idea that was proposed recently, and I'm sure has been talked about for a while now, is that you could create a predictions market for hard forks by making tokens.
Ben Davenport made a great post about that yesterday.
Exactly. So what are your thoughts on that? I know you're a markets guy, and I am as well. We believe in the free market, and one of the things the free market can do is sometimes predict more accurately than mere guesswork what will happen. And I think that in the case of a predictions market for hard forks, you would see a very quick, like you said, shift from one side to the other, and that would probably even steer the direction the network actually goes if there was enough volume behind those prediction markets. Do you think that would be something that should be developed? It would definitely be interesting.
Yeah. So I loved that idea. Basically, he wrote yesterday in a blog post about how an exchange could create, because all the trading that goes on in a normal exchange is not done on blockchains. It's just internal accounting in the exchange. So there's no reason an exchange couldn't make a new coin in the database, called, Bitcoin B, and then promise to redeem Bitcoin B for the fork, if and when it happens. And then anyone who has Bitcoin suddenly has an equal balance of both coins, Bitcoin and Bitcoin B. And the two of them would trade against each other. And you would see, basically if the market thinks that the fork will be successful, the price of Bitcoin B will be high and the price of Bitcoin A will be low or tend towards zero. If it is contentious, if the market isn't sure which one will win, the prices could sort of bounce around each other and there wouldn't be a clear winner. And that is the kind of thing that would help the industry know if a hard fork would be really dangerous. Because if the market doesn't know which one it would choose, then the hard fork will be contentious for longer. And that would be more damaging. But if immediately everyone jumps to Bitcoin B and the price of that, hovers around $400 and the price of the other one falls to zero, the hard fork is not going to be as dangerous as some of its detractors might think. Because people will move very quickly to it. It will very quickly become Bitcoin. And, things would be relatively smooth. So, that idea of having an exchange trade those things is excellent. I really hope an exchange does that. In the US at least, probably a regulator would be pissed about that and not let it happen, since they like to prevent people from using useful things. So maybe it needs to be an exchange that's not in the US, but, because the coins themselves would probably be considered
as security,
futures or derivatives or securities or something.
And you would know about that, right?
I do know a little bit about those things, yeah. It's just an amazing innovation that someone needs to do, but as with many things, it may not happen because of the fear of regulation and men with guns who want to hurt people.
Exactly. Yeah, and I think you and I and Roger are all on the same page, in reference to the desire that free people should be able to freely trade peacefully with no threat of violence. And whether if they want to make a prediction that next week the network will hard fork, well, that's something that they should have the right to do. And
they are adults in a quote unquote free country. And why the hell can't someone do that with their own money? The only problem is if one party is defrauding someone or lying about what the thing is or failing to fulfill a promise or, that kind of fraud thing, I would applaud regulators for going after fraud, but they tend not to. They tend to just try to control peaceful human behavior because they don't like how it's being done. And that's a very Soviet mindset. And unfortunately it's creeped very much into the American psyche.
Absolutely. And, that's one of the most exciting things about Bitcoin is that it offers a fraud-absent market where you can transact and you can engage without this fear of censorship, and you can do that regardless of what jurisdiction you live in. If you live in Russia or if you live in Venezuela, you can still have some free economics now, and soon, more as these technologies develop, as we move into additional blockchain securities and additional blockchain markets, we'll start to see stocks of companies trading, and we're already seeing that for some companies, and that's an exciting development.
It's very exciting.
And, maybe that will be Shapeshift version 2. You'll have the instant conversion between Bitcoin to shares, and maybe you've already thought about adding smart property tokens or counterparty tokens or op return tokens or whatever onto Shapeshift. Have you considered that?
Well, not only considered it, but that is the plan. I mean, the plan with Shapeshift is to enable frictionless exchange of any blockchain assets that are being traded, traded with some level of liquidity and popularity. And so I think a lot of people see Shapeshift as like, okay, well, so you can buy Dogecoin. Why is that cool? They don't understand that Dogecoin is just one of many of these blockchain tokens that are starting to be experimented with. And just as like in the early days of the internet, you had all sorts of, .com companies starting up and internet businesses, most of which were totally stupid and failed. But the concept of having those services, of having websites, having companies based on the internet was completely valid. And over time, the market figures out really good ways to do that. The same thing will happen with blockchain tokens. and you will have, a universe of tokens running on blockchains, maybe all of which on one blockchain, maybe all of which will be on the Bitcoin blockchain or a few big ones. I don't think there will be millions of blockchains, but I think there will be millions of assets on these blockchains. And so Shapeshift is simply being built to make it as easy as possible to convert any of those assets into any other.
And that's a noble endeavor, and one that I'm very excited personally to see develop. It'd be great to see the day when a farmer in Africa has equal access to invest in profitable enterprise as the millionaire on Wall Street. And I think we all applaud the financial inclusion. Financial inclusion was the theme of the last podcast with Andreas, and it's part of what makes Bitcoin so exciting to all of us involved is the financial inclusion and empowerment that Bitcoin offers. I mean, of course, we are going to need bigger blocks if we're going to see the shares of all these companies traded on the blockchain. So tell us a little bit more about Shapeshift and how that's developing. One question that I've had is how much has replaced by fee and the change away from more of a first seen safe mining consensus or not consensus, but mempool policy, how has that affected you? Have you seen increased attempts to defraud Shapeshift, and have you been able to combat that by looking at the transaction to see if it's flagged as a replaced by fee transaction?
Yeah, very good question. I have long been a very strong proponent of not vilifying zero confirmation transactions. So, and this is something I argued about with people on forums, in 2011 when we were talking about Bitcoin, and people would say Bitcoin will fail because no one will ever want to wait 10 minutes to buy a cup of coffee. Mm-hmm. And it blew my mind that they couldn't understand that a Bitcoin transaction is basically instant. It takes about a second. Someone will absolutely wait a second to pay for their coffee.
Exactly.
And then the question is, will someone sell a cup of coffee, add zero confirmations to someone? And of course the answer is yes. Because generally people do not defraud with double spends. And economically speaking, there is a point under which it does not make sense to even try. So, and then there's of course the whole argument that companies can build layers for security. And we have BitGo, which just released yesterday something called BitGo Instant, where any transaction that's sent from a BitGo wallet is guaranteed not to be double spent. And so Shapeshift integrated with them, which means that if you're doing an exchange of Bitcoin to Ethereum or something on Shapeshift, if you send the Bitcoin from BitGo, you'll get zero confirmation transaction right away. So it's very fast and convenient for the user.
Now, is that powered by green addresses using multi-signature?
No, it's BitGo's own thing. Green address, I think, has something similar. But the idea is that if any wallet that sends the transaction out, if they build it in a certain way, they can, guarantee or reasonably guarantee that the same outputs won't be spent. And so you have market-based solutions which allow zero confirmations, and not only zero confirmations with risk, which is often okay also, but confirmations without risk. We are guaranteed by BitGo not to have a double spend. And people need to really appreciate the user value, the user experience value of being able to push money around instantly without waiting for 10 minutes. That is a very important part of Bitcoin. It's something that's always going to get better, and is something that I think a lot of Bitcoiners will laugh about, when we're all old and sitting around joking about the early days about how people would wait for 10 minutes but wasn't secure not to. That's something that will be solved and is being solved. So we were very happy to work with BitGo on that project.
That's great. And you actually had one of the best blog posts on the topic, I think. And so I will link to that in the show notes for our podcast listeners who are interested in a more in-depth dive into, the economics, right? Because a lot of the engineers are just looking at the engineering side of things. But if you look at the economics, zero confirmation transactions are very much valuable and an important part of the economy. We need to preserve the value of those transactions. And so I guess you would be in favor of reverting replaced by fee. I think it was pushed through quite fast without a lot of consensus from the community. Any comment there?
I am relatively undecided on replaced by fee. I don't really see a huge value in it. and I see a lot of potential problems. I'm sympathetic to some of its supporters who have said that there are various, opt-in measures, and it's not, the problem with a lot of this stuff is it gets so vilified and so trashed so quickly by divisive people that it's hard to know what the truth is, which is often somewhere in the middle. So I think replaced by fee probably wasn't appropriate to get into Bitcoin right now, but I don't think it's terrible, and I'm open to people who say it's an improvement. I'll leave that judgment up to them. I do know that zero confirm transactions are incredibly important, and anything that would permanently break that is probably not a good idea. But I don't think that RBF permanently breaks zero confirms at all.
I agree. And the wallets just have to be smart enough to handle that. Now, people say that RBF is opt-in. I think it would have been a better design choice, perhaps, maybe a little bit more work, maybe a lot more work, to actually make the opt-in on the recipient side, right? So the recipient would generate an address that, say, starts with 4 instead of 1 or 3, and that would be an opt-in RBF address that can receive RBF transactions. And maybe I'm off on that, but I think that would put the opt-in power where it needs to be, which is with the recipient, who needs to be okay with an RBF transaction.
Yeah, I think that's probably a pretty reasonable statement. And basically, I don't see the overwhelming need for the feature, right? And so in software development, it's often a good practice to only add features that are clearly needed. Even if something is maybe good or may be good in the future, it doesn't mean it should be added, because it adds complexity to the system.
Technical debt, right? You have to support that from then on. If there's addresses that begin with 4, well, you can't just stop using those addresses later, or all of a sudden, payments, all these addresses become, invalid, and they won't work for sending payments.
Yeah.
In reference to Shapeshift and replaced by fee, have you modified your software to check if transactions are opt-in?
So we use a number of metrics. So basically, when someone sends in a transaction to us, we may wait for one confirmation if we believe the transaction is suspicious, or we may process it at 0 confirms.
And you're using block ciphers, risk?
We use block cipher plus some of our own magic to do that. So we work closely with block cipher. And obviously they stay very up to date on all this stuff, so they're constantly changing. So it's just in process. It's something that's continually evolving. As these systems get better, they change.
And one interesting thing that might actually help the consensus develop faster around the mempool is the idea of weak blocks. That would reduce the blocks into like mini blocks that kind of develop on average maybe once a minute or something like that, right? That would allow for synchronization of the mempool to be a continual process rather than something that just happens in 10-minute intervals. And that would increase the efficiency of Bitcoin in a low bandwidth environment, but it would also probably have some impact on double spends and how long those were possible. Do you have any thoughts on that?
I don't. That's starting to get a little out of my technical wheelhouse, but good things to think about.
Any other changes that you would like to see done within the next 2 years from a hard fork? Do you think that there are features that we could add that can only be added by a hard fork, or that should be? We mentioned deploying SegWit as a hard fork earlier, and you said that, if it's better technically, that might be something that a hard fork should do. Anything else that you think needs to change on the consensus level in Bitcoin?
Not really. I mean, despite all the people throwing bombs at each other, I think the protocol works pretty damn well. And I don't think it needs many changes. I think a lot of the really cool stuff that people have proposed are good ideas, like SegWit and Lightning Network and bigger blocks, and I welcome all those things. Beyond that, I don't see huge needs of anything. The protocol is pretty sound and solid. Mostly what Bitcoin needs, well, at the community level, it needs people to be friends again, but on the global adoption level, it just needs the business layer, continue building useful products, which is ongoing. And I think that's where most of the innovation has to be done.
Completely agree. Well, thank you so much for coming on the podcast, Erik. Again, this is the Bitcoin.com podcast, and this is your host, Zach Doty, with Erik Voorhees. And it's been a pleasure to discuss the fork, the Bitcoin Classic implementation, what's happening right now, and improvements to scaling Bitcoin and what the future holds. So again, thank you so much for coming on the show, Erik. We're going to have you on again. Really appreciate what you're doing.
My pleasure. Thanks so much for having me.
We're now standing on the precipice of a global revolution of economics, politics, and government. Welcome to the blockchain. Power corrupts, money is power. The power to control the money is one that is now in the hands of those who pretend we can't function without them. So how can we do something about it? Working hard to get a raise, lifting that wage up. Inflation takes it like a hidden taxation. Manipulated interest rates to give the banks a way to create money with the loans that they giving out daily. That means our money is dead and we gotta pay back more than 100%. No wonder then why the middle class is going under when the ones above them gotta cover and come to collect. And many have no access to banking, making payments or saving, so more fees are taken. And every day the gatekeepers are trying to stop change. We cannot wait. Welcome to the blockchain.
Welcome to the blockchain. Things are about to change. Open up the gates. Systems get replaced. Bitcoin, decentralize the trust. Security, transparency. The network's run by us.
Bitcoin is a decentralized ledger, and the currency is its first enterprise ever. Secured by the worldwide incentivized network, can't be stolen or controlled by any size effort. You can send it anywhere and instantly. No one can intervene, no third party in between. There's no counterfeiting, algorithms control the outer limits of how many coins can get released. Programmable money, no government can seize it. Payments can be customized by sender and receiver. Contracts written, cementing your agreements with terms that can't be met. Once you consent, then it completes it. Autonomous businesses are possible where profit is distributed amongst those adopting it. Paradigm shift, we must adjust to the end. And with the blockchain, Bitcoin is just the beginning.
Welcome to the blockchain.